Welcome to another video. In this video, we will see how this indicator works and how to trade with it. You need to follow the signals to improve your portfolio. First of all, when you get access, you will see red highlighted areas on the chart. These are essentially heat maps. The heated areas represent regions on the chart where most orders are placed by big players, like banks, institutions, and so on. These heated areas help us identify key levels on the chart. If you are a new user, for example, if this is your first month using it, we recommend that you only follow the signals. The signals work directly with these heat map areas. That is how this indicator operates. Next, we will go to the settings icon. The default settings should remain as they are. The default settings work for all asset types, including Forex, crypto, and stocks. Whatever you trade, the default settings will work. We have backtested this multiple times, so do not change or alter these settings. Keep them set to default. You can change its color if you prefer, but the bright red color is the most accurate on the screen, which is why we set it by default. You can also see the POC, point of control line, which is the center point of the red heated area. These heated areas can act as rejection zones. Towards the end of this video, I will also show you how these red heated areas function as retest zones. Another feature here is show volume. When you enable this, you can see how much volume has accumulated in that specific area. By enabling this, you can identify which areas are stronger than others. You can turn this on, but by default, we have disabled it. Enabling too many visuals can make the chart very noisy, which is why it remains off by default. Now you can see Show Retest Predictions. These are retest levels. Retest levels indicate that if the price bounces back, touches that area, and shows rejection, it will likely move upwards or down. For example, we can see the price broke above that area, retested it, and showed a clear rejection to the upside. Following the strong candles, the price continues to move up. Most importantly, our signals are strictly non-repainting and non-lagging. The next toggle is Show Buy-Sell Signals, and the last one is the Enable Alerts toggle. Now, let us go through the chart. First, we recommend selecting the right broker feed. For instance, if you are trading gold, XAU-USD, or any Forex pair, we recommend using the Oanda chart feed on TradingView. We recommend Oanda because their broker feed provides highly accurate data. For crypto, you can use Binance or compare across exchanges to see where the heat map displays most clearly. The cleaner the heat map data on your chart, the more accurate your signals and trades will be. As I mentioned, you can use this indicator to trade crypto, stocks, Forex, and indices, whatever you prefer. Now let us discuss the signals. As I mentioned earlier, these signals are non-repainting. A signal will never disappear, shift position, or move up and down after appearing. It stays locked onto that candle. Now, I am sharing the core foundation for becoming a profitable trader using this strategy. I will explain how you can achieve consistent profitability. If you are a new member in your first month, stick strictly to following the signals for now. You do not need to trade the retests yet. That is an advanced feature we will cover later. For instance, on gold, using a 5-minute time frame, every signal offers a clear target. On a 5-minute chart, set your take-profit target for 40 to 80 pips per signal. Here we have a buy signal at 4,387. Our first target would be 4,391, and the next target would be around 4,395 or 4,396. These are realistic and safe targets. Once your first target is reached, you can move your stop loss to break even and hold the trade. If you have a small account, I recommend taking your 40 to 80 pips and closing the trade. Similarly, on this sell signal, you could easily secure 40 to 80 pips. Now, let us cover where to place your stop loss. On a buy signal, place your SL below the heated area, right near these dashed lines. Unless high-impact news or extreme volatility is expected, I recommend avoiding a tight, hard stop loss. These areas represent liquidity zones, and the market may temporarily sweep below them before bouncing back up. If a candle closes on the opposite side of the level, you can manually close your trade, or you can exit if an opposite signal appears. In the next section, I will show you how to recover a loss. To recap the sell signal setup, just as we place the SL below the heat map for a buy, we place the SL above the heat map for a sell. Again, you can target 40 to 80 pips standard. Because these signals do not repaint, following these rules consistently month after month will make you a profitable trader. As you can see here, the market made a massive move where capturing 40 to 80 pips was very straightforward. Here is another easy 40 to 80 pip setup, and another right here. Now let me show you scenarios where you should avoid taking a signal. Here is a clear example. Sometimes you will encounter a situation like this. A sell signal appears, but directly below it lies another major heated area. As mentioned, heated areas mark institutional liquidity where major market moves originate. The price will often react to that lower zone and bounce back up. If a sell signal forms right above a major heated support zone, wait for a candle to close firmly below that area before entering a sell. Otherwise, stay out of the trade. In this instance, another sell signal appeared, but the very next candle tapped the heated area and bounced upward. By waiting, you avoid taking a bad trade. On the other hand, look at this buy signal. There is plenty of open space between the entry and the next upper heated zone, providing ample room to hit our target before encountering resistance. If a buy signal forms directly beneath a strong overhead heated zone, wait for the price to break above that area before taking the entry. Now, let us discuss how to handle and recover a loss if your stop loss gets hit. Suppose you entered a buy order here with your stop loss placed below the support level, and an opposite sell signal appears. When an opposite signal triggers, close your open buy trade immediately and take the new sell entry. Here, the previous entry was around 4355, and the new sell signal appeared around 4340, a difference of roughly 150 pips. The subsequent drop went down over 300 pips. Following the reversal signal allows you to smoothly recover your previous loss. However, do not increase your lot size or use martingale strategies. This system naturally recovers drawdowns through trend continuations. Just maintain strict risk management. Regarding the secondary feature, trading retests directly, I advise new users to stick strictly to signal trading for their first month. I will dedicate a separate video to retest strategies, so this overview does not become overly long. Finally, let us set up alerts. While custom webhook indicator alerts usually require a paid TradingView plan, configuring standard alerts within the platform is simple. Select your desired time frame first. Then, navigate to the indicator name on your chart, click the three dots, and select Add Alert. Keep the settings default. Ensure the condition is set to trigger on any alert function call. Then click Create. Whenever a new signal forms, you will receive an immediate notification. If you are using TradingView on a desktop or browser, the notification will appear under your Alerts tab. If you have the TradingView mobile app installed, you will also receive push notifications directly to your phone. This indicator works across all time frames. Higher time frames like the 15-minute, 30-minute, or 1 hour allow you to catch massive market trends, such as this sell trade that captured over 1,000 pips. However, for your first month or two, start on the 5-minute time frame. Once you build familiarity and discipline with the execution, you can expand to whichever time frames you prefer. I hope this walkthrough was helpful. See you in the next video.